Is deflation a thing of the past? Or Chair Powell is finally whipping inflation once and for all? Can we get inflation down to 2% this year at all? Last time I checked, oil price is at $80 a barrel again. Yes, before the market closed on Friday. Gold and silver rallied higher. So did copper, oil, and Bitcoin. This feels like inflation to me, as we just got inflation number dropped to 6.5%. This trend is not a good sign for the Fed. One reason all these asset classes moving up because dollar is going lower. Another reason is because China is opening their economy back up. Does that mean supply chain issues will be solved this year? Why are bonds and dollar almost always going the opposite direction? Last year, as TLT got sold down, DXY rallied higher. This year, it seems, dollar will be going lower and everything else will rebound. Will Chair Powell be able to drop inflation down this year once and for all? Or deflation is a thing of the past in this decade? I will explain it all right after this. And of course, smash the like button. If you want to be my good boy, apply to write your first book with me. Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here, and you know what to do. And push my button if you like what you see in today's video, because I can't push it from this side. This video is brought to you by my Patreon. If you are a good boy, go to patreon.com/magicalgoddesscheryl to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get it into the bookstore. You want it to be real. You want it to be true. You need to be my client, don't you? Seriously? Bitcoin just had a 25% breakout in the second week of the new year. Oil price just going back above 80. Is this not a warning sign that inflation is persistent? Or is it something going on with the US dollar? Now that markets want to move higher, wealth effect will be back. It makes the Fed's job even harder to get rid of inflation. Why bonds like TLT are rising and dollar DXY is falling right now. The overspending by governments coupled with inflation has really started to affect the perceived value of dollars in relation to other currencies. As these relationships break, the losers are the people holding the devaluated currency. And this is for every country, the US included again. There's a progression in how it'll go, but you cannot save both the bond market and the currency market because they work at cross purposes. Whatever you do to save the bond market hurts the currency. Whatever you do to save the currency hurts the bond market. And every central bank in history has promised they won't sacrifice the currency. And every central bank in history has ultimately sacrificed the currency. And the reason they always choose the currency over the bond, or the reason they always choose to sacrifice the currency over the bond, is for two reasons. Number one, the currency affects the citizens more than the government. And the bond market affects the government more than the citizens. So they're going to bail themselves out before they bail the citizens out. And the second thing is, if the bond market blows up and the banking system blows up, there is no longer a distribution system for the government to raise money. So they can't let the bond market blow up because then they can't get money anymore. And then if they can't get money, they can't operate. So this is a very long way of saying that I understand why the market moved the way it did. I think maybe in the short term it makes sense. But in the medium to long term, it doesn't make any sense to me at all. Again, kind of watch what they do, not what they say. The problem, as we've kind of figured out and found out, that it's very hard to just get to 4 or 5% inflation. It goes from 2% to 12% pretty quickly. They don't have as much control as they think they do, right? And the problem with 4 or 5% inflation, you can kind of get away with it because it's annoying and it's frustrating. But it's not totally ruining your life. But with 8, 9, 10, 12, 15, and 80% inflation, that starts to ruin the people's lives. And that's when they start to push back the government. And that's what central banks and governments don't want. As the dollar is falling and bonds are rising, interest rates are falling, the governments are essentially bailing themselves out. Will this wipe out the progress the Fed did last year trying to keep prices stable? I think that's possible. The thing about the Fed is that market believes one day they will become their friend again. They always tell you exactly what they're going to do before they do it. This is the no drama Fed. All you have to do is listen to them and believe them. They don't want to surprise markets or trigger any unexpected volatility. So they signal in advance and move accordingly. In reality, there's a bit more to it than that. The Fed also signals through leaks to chosen reporters. Still, it's easy to know what's coming if you know where to look and who to listen to. The hard part is knowing when the Fed is on the wrong course. They usually are, and when they will realize it, usually too late. Based on that, you can forecast how much harm the Fed will do and how badly the economy will be damaged before the Fed changes course. That's more difficult and the timing can be tricky, but that's the real art of Fed forecasting. But the economy will suffer a severe recession due to the rate hikes, and probably soon. Because of the peak of bond yield and the length of the inverted yield curve, since the impact of monetary policy on the economy generally has a lag of maybe 9 months to a year, we can expect the economy to be impacted by last year's aggressive rate hikes in Q1 and Q2 of this year. But once we're in a recession, rate cuts won't do any good, nor will QE. The recession will happen in a context of higher energy prices, supply chain disruption, it's back, and a Chinese collapse. Good luck getting through that. In this scenario, Goldilocks gets eaten by the bears. The Fed will slam on the brakes on rate hikes and will probably have to cut rates by October. Why won't he cut rates sooner? The Volcker mistake. Jay Powell does not want to repeat the mistake of Paul Volcker, who also fought inflation with rate hikes but cut rates too early and then came to regret it. When Paul Volcker was appointed Fed chair in 1979, he immediately set about ending the worst inflation the U.S. has seen since the end of World War II by raising rates. Then the U.S. was hit with a recession in January 1980. Unemployment rose to 7%. Inflation was still 14.7% in April 1980. But Volcker was under intense pressure to cut rates in the face of a recession and layoffs. The Fed blinked. Volcker lowered the Fed funds target rate by 7 percentage points. The recession was over by July 1980, but inflation was not. Inflation at the end of 1980 was still over 12%. The Fed and Volcker had damaged their credibility as inflation fighters. This became known as the infamous Volcker mistake. From there, Volcker doubled down because of the credibility damage from the Volcker mistake. Interest rates had to go even higher. It was in this stretch that the Fed funds target rate hit 20% in June 1981. This extreme level triggered another recession in July 1981, the second in 2 years. The 1981 to 1982 recession was the worst since the end of World War II. And interest rates were still 15% in the middle of 1982. The severity of that recession was not surpassed until the global financial crisis of 2008. The point is that when Volcker lowered rates in 1980, the job of beating inflation was not done. Inflation went even higher, and Volcker had to take even more extreme measures finally to get it under control. The lesson for the Fed today is obvious. If Volcker had ignored the 1980 recession, inflation might have come down by 1981. Instead, it lasted until 1983. And it was only defeated by a recession worse than the one Volcker was initially worried about. The lesson for the Fed today is obvious. The Fed first ignored inflation in mid-2021 by calling it transitory. At that time, the Fed's policy rate was 0%. The Fed's battle against inflation began in March 2022 with a rate hike of 0.25%. Inflation rose at an annualized rate of 9.1% in June 2022, 8.5% in July, 6.5% in December. In other words, inflation is coming down, but at a painfully slow pace. The problem is that Powell will soon find himself facing exactly the dilemma that Volcker faced in May 1980. The mission to lower inflation is not finished. But higher unemployment and a recession create enormous pressure to lower interest rates. Which path should he take? Ignore a recession to kill inflation once and for all, or pump economy back to inflation again? You can let me know by using the like button. If you want him to cut rates, then hit like. If you want him to keep the rate high, then hit the dislike button. Let me know. This is my client Teddy Eazzy's book, Wicked Pussy Perfume. It is an erotic novel, such an awesome book. And my book, Rainbow Focus. You are such a good boy for watching my video right till the end. Bye.